All right, what is up, everyone? Eric here again with Travel and Trading. Figure I'd do a quick video here just to kind of keep you guys updated with what's been going on, real quickly in the markets here if you haven't been paying attention. A lot of you guys were messaging me asking, my thoughts and opinions and things like that. So I just want to kind of go over on this video here, just touch on a few key points here for you guys, mainly with what's been transpiring over the last few days here. It's been, eye-opening for a lot of people. For some of you, we've been through this before. But yeah, so I'm not going to recap any of my trades here for you guys that are in the Facebook group and stuff like that. You see me post a trade here, made a couple thousand off a WAL trade, pretty easy stuff there. So I won't really go into that, but we're mainly going to talk about here those topics that a lot of you guys messaged me about. Sorry I couldn't, answer you all individually at once. It was too many coming through, so I think I'd just make a quick video about it, giving you guys my thoughts and things like that. But hey, before we kind of get into this, if you guys can do me a quick favor, hit that little thumbs up button, like, comment, subscribe, all the above. And definitely, I would like to, get your guys' input if you want to post, some comments, stuff like that below. Definitely want to get your thoughts and feedbacks on this. Now, I know as day traders, we definitely need to be paying attention to the overall macro aspect of the market because it does, in effect, affect how you trade. So this past weekend, if you haven't been paying attention to the news, another major bank collapsed, SVB, Silicon Valley Bank, along with First Republic as well too. Within like the last 48 hours within each other, which is like an unprecedented thing to happen. This morning, before like the markets had opened up, President Biden, I believe, said that all senior management of like multiple banks that are like government controlled, they were going to be fired. Which I'll kind of get into why like that's a little bit nonsense here in a minute as well too, because those guys are okay. But anyways, but yeah, basically that kind of announcement I believe happened just because they didn't want to probably freak out the market and have things drop out, in my opinion. Whatever. Um, but yeah, I mean, three banks collapsing within like a week of each other is kind of a little bit of alarming. Um, Not only was it SVB, but First Republic Bank. I mean, they're all, FDIC insured, and I want you guys kind of get a little clarification on this because a lot of you were asking, like, is this kind of similar to the FTX thing, which it isn't. It's a little bit different, in between the two, and I'll kind of talk with you guys too about like what my plans are, especially as things are unfolding. As I mentioned for you guys, like the last year or so, like, hey, this stuff, the way the market was going isn't going to last forever. Now we're starting to see the beginning of it, and I'll kind of, game plan with that for you guys and give you a little, my little 2 cents on that. But yeah, basically if you're not familiar with what happened on Thursday, I think it was like 40 or 42 billion dollars worth of money was withdrawn from the banks from SVB, which like even if you kind of like adjust that for inflation, has never happened to a bank. So that was definitely a huge, huge red flag, and that's what made Congress and the government's kind of coming together over the weekend or whatever to kind of strategize on how they're going to approach this thing. Um, but yeah, I mean, with this happening with Silicon Valley Bank, SVB, also another bank. I mean, you guys already know what happened with Silvergate. Signature Bank was the other bank, and then also First Republic. So those are the banks that have been seeing liquidity get eliminated pretty quickly from just consumers wanting to, pull their money out or, do whatever they want to do for some reason. And this is kind of causing them to become insolvent. Now, the difference between what's happening with these banks like First Republic, Silicon Valley, and Signature Bank versus what happened with FTC, if you guys don't understand, excuse me, they're kind of in the same space, but a little bit different. For example, like Signature Bank and Silvergate, they did have exposures like the crypto, realm space, whereas FTX is fully like, crypto. And of course, First Republic is, just like a regular kind of bank. And then of course, SVB deals with like a lot of tech startups. So they're all different realms, but they're similar but different. So with FTX and their, demise and things like that, they never had money to begin with in the first place. Okay, that was the main thing with them. That's why that was just a pure, massive, giant Ponzi scheme because there was never no money there to begin with in the first place. However, with like Signature Bank and Silvergate and Silicon Valley Bank, they have money, just not enough. And if you don't kind of know about like the Sovereigns actually, act, and back when we did have fractional reserving and that got removed during a certain presidency, blah blah blah. Anyways, um, basically what's happening now is that these banks here don't have enough money to meet the requirements to service all their customers, because typically, what happens is that they don't just, keep your money in the bank. What happens with like, banks like First Republic, and then they usually will take the deposits that you put into the bank. They don't just leave that cash in there. They'll go buy, different assets from the government, like, bonds and things like that, which is, kind of guarantees return on their investment there. The only problem is that with those rates on the bonds that they get end up changing, of course, over time. And as we all know, Fed Chair Powell, again, you'll see how this ball starts to play into place. Not only do we need unemployment to slow down, the market, but also the rates on those bonds have changed. So now, when those banks took your deposits that you put into the bank at that point and bought, those bonds back in, 2020, here it is 2022, you needing to get that cash back and sell those bonds. Now they're coming back and they're worth a lot less than what they were 2 years ago. That's a liquidity problem where you can't service all your customers who wants to withdraw that money. So that's what's happening with these banks. They're becoming illiquid to the point where the FDIC is needing to go in there and sell the assets so that they can meet those requirements for those customers. Because if you don't know, pretty much all your banks, or most of the banks that you're banking with, if you're not doing something offshore or something like that, is insured by the government up to $250,000. That's it. Anything above that, you're just taking a risk leaving it with the banks. So what the banks are doing, what the FDIC is doing, is monitoring, making sure that they can meet those liquidity needs, and obviously based on the balance sheets and things like that, these particular banks who are collapsing don't have the ability to do that. So now the FDIC is stepping in and getting ready to take control and sell the assets to be able to meet those customers' needs. So that's what the problem is: insolvency. They don't have enough money. All right. Um, the crazy thing is, even though Biden said that multiple, senior levels of management are getting fired and things like that, the reason why I say these guys are in a pretty okay shape is because of the fact that, if you haven't been paying attention, they all took all their money out, sold their stocks and all that good stuff before all this happened. But for those of you who needed some clarity, it's First Republic Bank. Here's one. Okay. And then the next one again was Silvergate, Signature Bank, and lastly, the big dog that everyone's been talking about, SVB. As you can see, was this today? Yeah, this was posted on their website. This is their website today. They transfer all the deposits to both insured and uninsured, to sustainability of all assets, blah, blah, blah. You can read this junk at your own time. I'm not about to read all this, but anyways, this is where we're at now. To be honest with you guys, I think this is the beginning of the domino effect here, and I'll kind of go into detail of why the writing's kind of on the wall here, and we'll talk about what I'm thinking about game planning as far as this stuff here. But the reason why I say, when Biden had mentioned that, none of these executives and shareholders are going to get anything, I'm like, okay, whatever, they'll be fine. Because if you don't know, not only did these guys cash out all their stocks and stuff like that, they also got their bonuses the morning before the FDIC insured stepped into, to take care of everything, and take over. So, yeah, okay, they're not getting any money because they already had their millions of dollars in shares of stock that they cashed out on. They transferred all their money already. It's done. Of course, they're not going to get anything. So that was, to be honest with you, a sugar-coated statement, for lack of a better term, to make people feel good, I guess, someone's quote unquote. But if you kind of know the writing on the wall and been paying attention, you know what's going on there. But yeah, and the funny thing is, guys, and this is why me being in the financial industry for pretty much, oh God, it's been a while, since like 2008. Since, that was the whole reason why I even got in the financial industry, was because of that whole thing. Went from computer science major to dealing in finance. But anyways, man, these guys here and these upper level management people and the ones that run these banks, the people that run this world are so, it's just greedy, 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 greedy. If you guys don't know, Silicon Valley Bank, SVB, again, they focus on like tech startups and things like that. But on Monday, that Monday before Friday, they were, FDIC was stepping in on that. They had a rating with Moody's. If you don't know who Moody's is, go watch like The Big Short and stuff like that. They're basically the rating agency that ranks the financial well-being of certain businesses, industries, and banks and things like that. And they had an A rating with these guys Monday morning, and here we are Friday. Not even a few days later, these guys are getting shut down and becoming insolvent. And if you watch The Big Short, you understand why, which is it's like we really don't learn. Well, I don't know. I'm not gonna say we. People in general don't learn anything. But anyways, this is like freaking the beginning of 2008 all over again, in my opinion, which is fine because I mean I did pretty well, and I'm not one of those people who are heavily exposed to the banks. But those of you who are, please monitor your assets, folks. This is why I kind of go over this stuff here with you. But the reason why I say this is starting to begin, which I kind of sort of expected like collapse like this to happen, is because of the fact that remember, in order to slow down like inflation, we need higher unemployment. And if you paid attention to the meeting with the Fed chairs and some of the representative there that was grilling him, for example, they were saying like we need at least a 10% unemployment rate to be able to slow down the economy. What better way to get some more people unemployed other than collapsing a few banks who are already insolvent by raising interest rates for those who took out all these bonds to, borrow against with the depositors' money? Makes perfect sense. So now you got all this unemployment that's going to probably happen here because these banks can't even meet payroll. So there's, that. Not only that, with the Feds raising rates, they want to, put that fear in the market to where not many people are spending. So this all makes sense, and if you look at the back end to what's happening, if, the Feds want the rates to go higher, yields, to be indifferent from what you got, when you got them in 2020, that's like the perfect storm of you putting everything together to start to cause the unemployment, right? To start to begin to slow down the economy a little bit. Because now there's fear in there, there's less people spending on things, people trying to hold on to their cash. If you study the history of finance, this is pretty simple, okay? But yeah, so that's where we're at right now. But yeah, that's what's been happening. That's the background of what's going on here. You guys can go do some more due diligence, look on like, CNBC, MSNBC, all that good stuff, and look at, what's been happening lately with these banks and things like that. Again, it's 2023. We're only, 3 months into the year now, and I told you guys it's going to start to slow down around 2022, 2023, and I think we're at the beginning of that, where it's probably going to get a little bit more worse than it will get better. Unfortunately, I hate to say that. And unfortunately, there are going to be some ramifications for people who weren't well prepared with this, just like it was 2008. Just like it was in the Great Depression. Same exact thing, unfortunately. But that's why I want you guys to try to like share this video, get it out, other people, leave some comments, things like that, so that other people kind of see this and kind of be prepared and start to look into this thing. My fiance has, exposure to some of these things too, and I'm telling her like, hey, let's start to do, some other stuff, and with the money that we have in there because of the fact of what's going on. It's about that time. It's going to begin to get worse before it gets better, and we want to make sure that we're protected. So with that being said, as far as the game plan goes, a lot of you guys were asking me and messaging me too, like, hey, based on what you were telling me and what we were talking about, what is your strategy? What do you plan on doing, in the midst of all this happening? Well, let's take a look at a few things. Understanding like the history of finance is very important for you guys. And so I, encourage you to ask yourself, hey, what happened in the last time a recession happened or a market pullback happened? What things came out to be really good, during that time? Historically, it's been a few different things. The last, Great Recession there that we had in 2008, real estate did very well over the course of time. Private equity did very well during that time. ETFs did very well during that time, and tech did pretty well during that time. And of course, historically, investing in things like gold would be pretty ideal assets to invest in as well too, to move your money. So yeah, so that's pretty much what we're looking at. Now, my thought process here is that even though we're kind of in that cycle again, right? Those things would be okay to invest in my opinion. However, certain parts of it, okay? For example, let's kind of just talk about my choices and what I'm going to be looking at. One of the first things I'm going to be looking at, trying to invest, of course, into is gold / precious metals, also Bitcoin, okay? And this is why I harp on having Bitcoin all the time for people. Really, it just boils down to financial responsibility for you as a person. And is really the most secure thing to have. And for those of you who don't understand how Bitcoin works, if you can't even tell me what a node is, then leave me alone, okay? But for those of you who do understand why it works and how it's important, you care less about the price of it, where it is now, because it is a long-term gain kind of thing. Again, it has its pros and cons for some people who aren't able to be financially supportive, for those of you who don't understand how it all works. But anyways, that's one thing that I'm still, loading into, and going to be putting money into. I'm hoping that it does come back down a little bit. Yes, in the 20s is a decent price range, but I'm still wanting to average down as much as I can too. So I'm hoping it pulls back to like the 18s, between 12 and 18K range. I'm okay with throwing money in it then. So I'm hoping like this will scare it a little bit and bring it down some more, or we have another big um, you know, crypto collapse. And again, when I say crypto, I'm not talking about these other exchanges. I'm only talking about Bitcoin. Okay, Ethereum, I'll make a little small case for, but everything else to me personally is trash. Sorry, but not sorry. I don't see a real, use for it anyways at that point. But Bitcoin and a little bit of Ethereum, because I like the application, is the only thing that crypto-wise I would talk about. But yeah, because I've done my research on those and I like those. But anyways, that's something that I'm heavy looking into. Again, gold and just some precious metals. Now, real estate for sure. However, not particularly like single family homes and things like that with real estate. I'm talking about like REITs, real estate investment trust, okay? And I'm looking into like, ones that are really, really solid financially, okay? And the reason why I say this is because real estate and until human beings find another way of living, like if we can float in the air or something like that, real estate is going to always just be a phenomenal asset to have. Okay. Yeah, you can maneuver it different types of ways, but REITs is really like the most hands-off approach. We're still letting my money grow and be protected, that I feel comfortable with doing, me personally. So still those two things. I'm not going to look into ETFs this probably go around, maybe like one or two, but not too much. Just because it could still potentially grow, but just not as a fast rate as I would doing something else. Okay. Tech, well, private equity for sure. After what happened with Silicon Valley, not taking that chance. This is not the time to be looking into growth, potential growth stocks at that point. I mean, you could, but your investment won't be, your return on investment is, the risk is not there. Now, tech, I am still looking into, but only a certain part, okay? And that's going to be dealing mostly with like transportation and specifically artificial intelligence. If it doesn't fall along the lines of those realms when it comes to tech, I'm not dealing with it. Last recession, I did a phenomenal job. I, invested in Facebook when they IPO'd, and I held that thing until it turned into Meta, and I had a great return on my investment there. Some of this stuff is pretty obvious if you're a person who kind of understands tech and how it works. All these other things like, social media apps, et cetera, I think personally Google is going to start to take a little bit of a downturn and just kind of search engine optimization period, especially with AI coming out. I'm only focusing on those kind of things. And of course, companies that are heavily invested in it, like Microsoft, even Google itself too. And of course, Apple, of course, until, cell phone sector and communication begins to change. Those are the kind of things that I'm going to be looking at. Those are like my top four choices: gold/Bitcoin and precious metals, artificial intelligence stocks, and real estate investment stocks. Real estate investment trust. Those are the main things that we're going to be looking at, focus on investing now that this brink of recession is starting to come about. So those are just my thoughts, guys. I mean, I hope that, shed some light on that, but be very cognizant and due diligent of your, finances. I definitely implore you. And all this was happening over the weekend while I was out just traveling, which was crazy because I was just getting some messages from people and just kind of like, some of the places I had service, some places I did. And, then I'm back here on Monday to get back to trading with you guys. I was like, man, all this happened in over a weekend span. And some of you guys traded FRC, which was First Republic. And the last time when Silvergate was dropping, we had that on the alerts and, profit off of that too. So there's money still to be made there. You just got to be due diligence. And this is a prime example of why I tell you guys, I don't hold stocks overnight when I'm day trading, all right? And of course, my long-term investments, or maybe even some swing trades, that's fine. I'm not worried about them. They'll hit the targets when I want them, when they hit them, right? Or they'll go exponentially. But when it comes to day trading, this is a prime example of why I do not hold stocks overnight, no matter how much I want to, because you never know what's going to happen in between that time frame that the market is not open that you cannot control. Okay. Um, Learned that lesson the hard way plenty of times earlier on in my trading career, and time after time again, it just repeats itself. So I'd much rather take a hit now and, you know, game plan again later versus risk something like this and lock my funds be locked up and now I can't get anything. So hopefully this video helped you guys out, but and you understand a little bit the difference between what happened with FTX and what's happening now with Silvergate and, you know, SVB and First Republic and all these other banks, Signature Bank and, you know, all these guys. And you're going to be a little bit more informed. Just take a few minutes, you know, and just being well informed. I'm also going to be doing some more due diligence with like checking in some of my other growth areas of, you know, businesses I invested in to make sure they don't have any exposure to, you know, Silicon Valley Bank, because I do invest as well too into startups and things like that. Um, and I'm just going to be double checking to make sure they don't have no exposure to those guys as well too, because, you know, again, it's my money doing my due diligence. But that's it for you guys. Let's get ready for tomorrow. I'll be ready to put the watch list out here in a couple of minutes. Just give me a few minutes. But other than that, stay green.